How Bitcoin works. Bitcoin, the world's first cryptocurrency, was created in 2009 by a person or group of people using the pseudonym Satoshi Nakamoto. The invention of Bitcoin ushered in an era of cryptocurrencies and blockchain, with thousands of other digital currencies being created in the years that followed. But how exactly does Bitcoin work? Let's explore this in detail. What is Bitcoin? Bitcoin is a decentralized digital currency that allows instant payments to anyone, anywhere in the world. Bitcoin uses peer-to-peer technology to operate without central authority. Transaction management and Bitcoin issuance are carried out collectively by the network. How is Bitcoin created? Bitcoins are created through a process called mining. Mining is the process of adding transaction records to Bitcoin's public ledger of past transactions, known as the blockchain. This ledger contains all transactions ever processed, allowing a user's computer to check the validity of each transaction. Mining is a competitive activity, with miners around the world using specialized hardware to solve complex mathematical problems. The person or group that solves the problem first gets the block reward, which is a certain amount of Bitcoins. This is the only way new Bitcoins are created. How are Bitcoin transactions processed? When one person wants to send Bitcoins to another, they create a transaction and digitally sign it. The transaction is then transmitted to the Bitcoin network, where it is verified by miners. Miners confirm that the person making the transaction has the Bitcoins they are trying to send and that they haven't spent them before. Once the transaction is verified, it is included in a new block of transactions. This block is then added to the blockchain, making the transaction part of the permanent public record of all Bitcoin transactions. How is the value of Bitcoin determined? The value of Bitcoin is determined by supply and demand. As the supply of Bitcoin is limited to 21 million coins and the demand for them is constantly changing, the price of Bitcoin is extremely volatile. The price rises when the demand for Bitcoins exceeds the supply and decreases when the supply exceeds the demand. The risks and challenges of Bitcoin. While Bitcoin has many benefits, it also comes with a number of risks and challenges. Price volatility is one of the biggest risks, with the value of Bitcoin being able to change dramatically in a short amount of time. This can make Bitcoin a risky investment option. Another challenge is the decentralized nature of Bitcoin. Without a central authority to oversee transactions, Bitcoin is susceptible to fraud and illegal activity. Furthermore, if someone loses the private key to your Bitcoin wallet, they will lose access to your Bitcoins beyond recovery. Also, since Bitcoin is a relatively new technology, many people still don't understand how it works. This could make it difficult for people to trust and use Bitcoin, limiting its mass adoption. Conclusion. In summary, Bitcoin is an innovative digital currency that uses blockchain technology to enable secure and decentralized transactions. While it comes with its own challenges and risks, Bitcoin has the potential to transform the way we transact and handle money. As always, it's important to do your own research and fully understand any investment before committing to it.